Prices are in perpetual motion with no defined beginning or ending. The markets are always in motion. They never stop, only pause. As long as there are traders who, for whatever reasons, are willing to buy higher than the last price, and as a result, bid the price up, or traders willing to sell for less than the last price and offer the marker lower, prices will remain in perpetual motion. Even when the markets are closed, prices are theoretically in motion. For example, what price traders may be willing to buy or sell at on the opening the next day does not have to be at the price level the market closed at the previous day. What are usually thought of as three simple decisions of enter, hold, or liquidate a trade become a perpetual process of deciding how much is enough from both a profit and a loss perspective. If you are in a profitable trade, is there ever enough? Greed stems from a belief that there is never enough or there won't be enough. In an unlimited environment that is in perpetual motion, isn't there always the possibility of getting more? The appetite of true greed can never be satisfied. It will always leave the greedy ones with a feeling of lacking regardless of how much they have acquired. If you are in a losing trade, you won't want it to exist because it represents failure, so you can just act as if it doesn't, by convincing yourself that you are in a winning trade that hasn't gone in your favor yet. The how much is enough question can be answered in an infinite number of ways relative to your beliefs on the value of money, what you need it for, how important it is. Can you really risk it? How secure do you feel? And what is enough today may not be enough tomorrow because of other factors in your life. All relative questions that have no definitive answers and change with the changing environmental conditions. Having to confront these personal issues as a trader will only contaminate your observations of market movement because they have nothing to do with market direction and the potential or lack of potential of any particular market move. This is why successful traders have always stated emphatically, only trade with money you can afford to lose, meaning money that has little or no value in your life. The less meaning the money has, the less potential there is for your personal how much is enough issues to contaminate your perception of market movement. Thus, if you allow it, the market can always tempt you into thinking there may be more to be had in a winning trade and always give you something to hang on to in order to justify your hope that it will come back and make you whole if you are in a losing trade. Succumbing to either one of these temptations subjects you to the possibility of some very negative and painful consequences. The market environment is also unstructured in such a way that from a psychological perspective, there is no beginning and there is no ending. What I mean by this statement before you think that it's not true the market opens and closes at a specified time every day, is that from the perspective of the individual trader, the game only begins when you decide to enter and ends only when you decide to exit irrespective of market openings and closings. You have the freedom to structure the game inside your mind in any particular way you please. You can get in whenever you want for whatever reasons are good enough to justify your actions. You can get out whenever you want. In fact, the game only ends when you have decided that you've had enough and take the appropriate action to end it. The psychological implications to the individual confronting these conditions are staggering.